Australia's biggest miner is giving shareholders a record payout. BHP's first half profit fell, but the surging iron ore price and increased production means the company has more cash to spare. Rachel Papazzoni reports.
Barley, coal, wine, lobster, they've all been impacted by China's trade war with Australia. But not our biggest export, iron ore. China's rapid COVID recovery, coupled with low production out of Brazil, has seen demand for Australian iron ore surge.
It certainly has surprised us how strong the iron ore market has been. So at one end you've had demand stronger than expected, and at the other end you've had supply probably a little bit weaker than expected.
That's pushed up the price, almost doubling it in the past 12 months to be worth about $166 a tonne or 214 Australian. BHP has made the most of the higher prices, increasing production by 6% this half. While its net profit was down 20% on the same time a year ago because of losses to its coal operations, it's ramped up its dividend to give shareholders a record payout of $1.01 a share. That's about $1.30 Australian, returning a whopping $6.5 billion to shareholders, equal to almost 1% of the Australian economy.
Certainly good news for superannuation funds. It's good news for individual investors, making up for the very low rates of the return they're getting on bank deposits. It's also good news for the economy.
Today's dividend far exceeds the payout during the boom years of about a decade ago. Back then, companies like BHP were injecting a lot of their profits into new projects. Now they're operating, the cash is going back to shareholders. Fortescue Metals Group and Rio Tinto are tipped to deliver a bumper payday when they report this week. And some analysts anticipate the dividends from all three iron ore miners could be about $20 billion. That's one heck of an economic stimulus payment. Rachel Papazzoni, ABC News.